Bennett at nashvilleha.org.
You don't, you want to keep that out of the public discussion, and it's not, and later on, it's not. Or BZA. And so, you know, they may state for the record, well, you know, in my experience as an architect, here's what I've seen.
Julie, David, how are you?
I'm Mark.
All right, how are you?
Good. Appreciate all your help.
Our pleasure. One of the few days I have donned a tie in the last well, last 10 months or 11 months.
On behalf of the hospital authority, thank you.
I dressed up for you.
You look great.
You're too kind.
heard a big NPR report this morning on how far behind the IRS is with everything.
No, I'm sure. Yeah.
People paid their taxes last year with checks, and the checks still haven't cleared, and now all these people are getting dunning letters from the IRS saying,
Right. Yeah. I know one of my, one of our tax partners, I was talking to him and he said that as well.
That I didn't this.
You're on mute, Bruce.
David,
Hey, how are you?
I was talking to my in the back, sorry.
No, okay.
Hello, Julie.
Hi, Bruce, how are you?
Good.
Well, it was a different year. It was odd not to be out there this year.
Oh, very odd. Maybe
Yeah,
before we get to early interim work next time, you can actually come out and see us.
that'd be great.
I told Mark, I said, this is one of the few days I've gone to tie 10 months.
Are you in your office, David, or home?
I'm in my in my home.
Oh, good, good. All right.
Yeah, this has been my office since mid-March.
Oh. You missed a mansion, but that's not cool. As much as I like Richard, he's not a cool.
How you doing?
Good.
Richard, we got a mutual friend, Bob Delaney. He was bragging on you. I saw him a while back.
Yeah, I know Bob Delaney. All right. Good time. Madam Chair, we can't hear you.
I'm here
All right.
picking up kids.
No.
Yeah, I'm sitting in my car waiting for my son to get out of school.
Mhm. Do we have a quorum yet?
I think we do. I'm
We
looking.
do?
We do have 6 members present.
We do?
Yes, we're missing Dr. Burley, Reverend Sanders, and Pastor Stevenson. That I can tell.
Okay, so we can get started.
I believe so.
All right, I want to welcome everyone to the February 9th, 2021 Nashville General Hospital Board meeting. For joining us today. We'll go ahead and get this meeting started and call the meeting to order. As we start the meeting, I want to remind everyone who's not speaking to mute your phones. And for any votes that we have to take during the meeting, just unmute your phone and voice your vote with the aye or nay. And we will move on to approve the electronic meeting at this time. Manson, you want to read the,
Yes. Okay, I move that the items on the meeting agenda constitute essential business of this board. Meeting electronically is necessary to protect the health, safety, and welfare of Tennesseans, considering the COVID-19 outbreak, and any rule that conflicts with the governor's executive orders permitting electronic meetings be suspended. That is my motion, Madam Chair.
okay, at this time, I would like for someone to second the
Second.
motion.
Second, Joel.
Any further discussions? If no discussion, all ayes.
Hi, Ranga.
Aye.
Madam Chair, you need to have a roll call vote under the governor's order.
Oh, okay. Well, let's do a roll call vote. So everyone has to just announce their name?
Aye,
Yeah,
Slovis.
Yes, that's correct. Each one announce their name and then cast their
Okay.
vote.
Okay, go ahead, start over.
Bonnie Slovis, aye.
Manson,
Ranga, aye. Joel, aye.
Alex Fisher, aye.
Richard got walked on. I think he said aye as well.
Manson, aye.
I believe it's everyone except for Dr. Fagans.
Okay, Fagan's aye. Any nays or abstains? Hearing no nays or abstentions, the motion carries to approve our electronic meeting. Now we'll move on to new business, which is the final audit. Crossland, you have the floor.
All right, thank you. My name is David Hunt. I'm a partner with Crossland, and with me today is Julie Mayer. She serves as the senior manager on the hospital engagement. And so today we're going to go over a couple of items that you've been provided. One is the audit results booklet. And what this is basically the required communications that we as the external auditors are to provide you as the governing body of the hospital in regard to the audit, the conduct of the audit, the outcome, et cetera, the audit itself. So we're going to go over that, and that will help us to fulfill our requirements under the auditing standards to present this information to you. And then after that, we're going to actually look at the financial statements. And I'm just going to touch on some of the highlights in the financial statements themselves. But if anyone has any questions as I go over this information, feel free to stop me and we'll try to address those. So Julie, can you share your screen? Is that something? Okay. You want to put the results booklet up? All right, there we go. Okay, so after the table of contents, there is a letter, and it's just a brief letter that stresses our belief of the importance of an open line of communication between we as the auditors and you as the governing body of the hospital. After that,
Excuse me, I hear background noise. Can you all mute your phones?
okay. After that letter are the required communications themselves. The first item is the report on financial statements. We actually issue two reports, one on the financial statements themselves and the propriety of those statements, and we will issue an unmodified opinion upon your approval of those statements today. and which is a clean opinion. And it basically says that based on our audit procedures, we believe the financial statements as presented by management are fairly stated in all material respects. We also will issue a report on internal control over financial reporting, which is called a Yellow Book report, and that's required under governmental auditing standards. And we will issue an opinion. That opinion will be modified. We had one deficiency that we reported, and we'll talk about that in a few minutes. But that is the second letter. So it's a letter over internal control, not on your actual financial statements. After that, our responsibility is to audit in accordance with generally accepted auditing standards and governmental auditing standards, since you are a governmental unit, a component unit of Metro Nashville-Davidson County. And we conduct our procedures under both those sets of standards. So we have concluded our audit and those procedures. Our engagement personnel, you can see listed there. We have a two-partner review process, and then also Julie provides review as well for the staff. So basically, we have three levels of review that we include in the audit process. Plan, scope, and timing. We really had no change in our original scope based on our planning procedures. Areas of audit emphasis. Our audit is as required by auditing, generally accepted auditing standards, is a risk-based audit. We do not look at every transaction. Obviously, that would be impossible. But we do assess risk in our planning phase to determine where we believe, based on some of our internal control testing, inquiries of management, and some of our other procedures, where we believe the highest risk lies of misstatement in your financials. And we focus our attention and efforts and most of our procedures on those areas. We end up touching every area pretty much of the financial statements, but we do spend the bulk of our time on these higher risk areas, and you can see those listed there. Obviously, they're, the areas of your financial statements that are higher dollar amounts also might be more complex in nature. So that's where the risk lies in those complex transactions and the high dollar transactions. So that's the areas that we focus our main attention. Significant accounting policies. These are the policies by which the hospital records their transactions. They're listed in Note A to the financial statements, so you can see what those are. They're all in accordance with generally accepted accounting principles under governmental audit, under the GASB, the Governmental Accounting Standards Board, and are the proper type policies for an entity in a government of this sort. Next page is management judgments and estimates. There are certain balances within the financial statements that require management to make estimates, and such as the big ones for the hospital would be, the allowance for doubtful accounts and allowance for contractual adjustments on your receivables and your billings. But we evaluate, we test and evaluate those estimates, and we believe them to be properly stated, fairly stated. Depreciation would be another item that would be an estimate that's made by management, because you estimate the useful life of the capital assets that you're depreciating. So we also test the depreciation and look at it for reasonableness as well. Audit adjustments. This would be a situation in which during the course of the audit, if we found balances that needed to be corrected or adjusted, we would propose those adjustments to management. They did make all proposed adjustments that we had. So they are all recorded and reflected in the financials. We had no material unrecorded or past entries, if you will. So in total, anything that was passed on is very immaterial in the aggregate. Alternative accounting treatments, there were none that we noted during the course of the audit. So they were all the accounting treatments were standard. There was no unusual items in that regard. Disagreements with management on how to record a particular transaction or what the proper accounting treatment would be. We had none during the course of the audit. We saw eye to eye with management, as they did with us, about the proper accounting treatment of all the items in your financial statements. management consultations with other independent accountants. That would be a situation in which maybe management sought a second opinion, if you will, on how to record a particular transaction. It's fine if they do that, but if they do, they need to inform us of all the conclusions and the items that were discussed so we can evaluate that during the course of the audit. But to our knowledge, there were no such independent accountants utilized or consulted with during the course of the audit. Items discussed prior to our retention. This is really not applicable to the hospital since we are actually retained and paid by the city or the city itself, Davidson County. So that's not really an issue for the hospital. Fraud and illegal acts. It's important for you to know that we noted none during the course of the audit. We noted nothing that would indicate that there was fraud or illegal acts in our procedures or during the course of our procedures. Difficulties encountered in performing the audit. The audit went as planned, so there were no significant difficulties in conducting the audit. And then on the next page, internal control matters. I mentioned earlier that in our Yellow Book report or report on internal control, we had one deficiency that we reported. It did not rise to the level of a material weakness, which would be a situation or a deficiency that in which there was a reasonable possibility that material misstatement of the financial statements would not be prevented or detected. So it did not rise to that level, but we did note it as a significant deficiency, which is less severe than a material weakness, but important enough to report in the course of our audit. And that item is there in the third paragraph, and you can see what that says, that there's not a persistent process in place by which management can fully and timely reconcile the transactions posted by the outsourced billing service. This results in certain assumptions being made that may or may not be accurate, causing risks to the reliability of certain account balances within a given time period. Additionally, while the overall process for recording general ledger balances and amounts have been improved upon over prior years, and they were notably better than they had been in previous years. It's been getting better over the last several years. But there were still instances of material misstatement relating to some receivables and accrued liabilities that were discovered during and corrected during the course of the audit. So those are things that management I know is working on improving and so that we won't have those items noted in the future. And so I know that's a work in process or work in progress, if you will. But it was required for us to report that item. Independence, we do need to report to you that we are, as an accounting firm, we are independent with regard to the hospital. We know of no conflicts of interest or anything that would impair that independence. And we are required to be independent both under the AICPA's General Accepted Auditing Standards and the governmental auditing standards. And then lastly, we have included as an appendix the letter of representation that management will provide us when the financial statements are issued final. And basically, this is a letter that your financial management provides to us that says a lot of the same things that I've already been over, that they know of no fraud, that they believe the financials are fairly stated, that they've provided us with everything that we've requested during the course of the audit, et cetera. So, but we do include that in this booklet just so you can see what they represented to us at the conclusion of the audit. So those are the required communications. I know that's a lot of information in a hurry, but if anyone has any questions, I'll be happy to address those. Okay, well, let's take a look at the financial statements themselves, and we'll just touch on a couple of some of the more significant areas in the financials.
Hi, David.
After
This
the
is
tape,
Raghav. Excuse me.
Yeah.
I just had a couple of questions, if it's okay, if it's a good time.
Sure, absolutely.
Okay. So one has to do with the significant deficiency that you identified. What would it take for it to become a major deficiency?
Well, it would be more significant. Ultimately, management would probably, the item that we noted is a reconciling item. So ultimately, it would be reconciled. It's just not being done as timely as it needs to be. So ultimately, they would catch any error that would be in there. Okay, a situation like what a material weakness, if it rose to the level of a material weakness, we would believe as the auditors that it would never be caught or would not be caught, and that it would only be caught maybe during the course of an audit or something like that. So it's not as significant as a material weakness, but it is an item that needs to be improved upon, the timeliness of that reconciliation process.
Great, thank you. So that's very helpful, thanks. And my second question had to do with the stated responsibility in the document, right? Your responsibility under the GAS standards and government auditing standards.
Right.
Does that include the CARE funding, the provisions of COVID Act and the funding?
Yeah, actually it does. The fact that, you did receive CARES money this year, and that falls under, that is a federal award that has what's called a CFDA number, a catalog number, and it is required to be audited. However, all that money came from HHS. So HHS issued in late December, actually, we actually started testing the compliance of the use of those CARES Act money or the CARES Act money that was received prior to 6/30/2020. We had started the testing, and then HHS issued a mandate that basically said they do not want it included in the June 30, 2020 CFA, which is the schedule of federal awards, and to wait and include that in the 2021 version of that, even though some of that money had been earned and spent as of June 30, 2020. So we stopped that audit process, but yes, that will be, the compliance with that program will be audited in this upcoming year.
But these statements do not reflect those funds, or your audit of those funds.
So these statements do reflect the proper accounting of those monies, just not testing of the compliance of those monies.
Fair enough. Thank you. Thank you.
Right. So actually, the cash is reflected in here, as well as the amount that had been earned as of 6/30 and recognized as revenue, and then the difference, which is deferred and reflected as a liability as of year end, and then will be recognized in 2021 as revenue. And we'll see that when we look at the financials.
Thank you. I think those were my questions.
Okay, looking at the actual financial statements after the table of contents, there's just an introduction and then a listing of the board of trustees and the management team of the hospital. Then after that is our opinion. In our opinion, these 3 pages is actually the only part of this whole report that is ours as the auditors, is the opinion. The financial statements and the footnotes are representations of management. Now we assist them in the preparation of the financial statements and footnotes, but they are management's representations. But our letter, our 3-page letter, says we believe that those statements are fairly stated in all material respects. After that, there is an MD&A, a management discussion and analysis. I'm not going to go through this, but this is a great summary that is prepared by financial management. Bruce produces this, and it's kind of a summary of kind of what went on from a financial aspect during the course of the year with the hospital. So it summarizes a lot of the financial data that's actually in the statements themselves, and then kind of tells a story of what happened financially through the course of the year. So I'm not going to go through that, but that is a good read to kind of to capsulize some of the financial information in the statements themselves. And I will touch on a lot of what is in that when we look at the financials. So on page 12 is the first statement, the statement of net position. This is your balance sheet, if you will, as of a point in time, June 30 year end, June 30, 2020. And then we have a comparative column for 2019 as well. But moving down through there, the assets of the hospital are in the top half of the statement, and then the liabilities And then the net assets or the equity of the hospital are reflected in the bottom half. But looking at some of the larger line items and assets, I did want to note that cash increased significantly. You can see it was 3.6 million at the end of last year, and it's 11.6 million at the end of this year. And that's reflected of what we were just talking about. That's the CARES Act. A lot of that increase is the CARES Act money that has come in that has still not been spent as of year end. And so you actually received about 10.3 million in relief funds from HHS through the CARES Act. You actually participated or received distributions from 3 of those segments. You had a general distribution of about 700,000. Then you had a distribution because you're a safety net hospital of about 9.4 million, which made up the 10.3 that you had received as of year end. And so those funds will be utilized primarily to pay down some of your accounts payable that had increased, and we'll see that in a second as well, that had to increase because of some of your reduced income for the last 5 months of the year and some of your increased expenses as well. Most of the other assets remained relatively consistent with the prior year and within, our expectations of those balances. So as you move down through there, you have patient accounts receivable, net of contractuals and uncollectible amounts of 6.8 million. And then some various other assets, as I said, that remain relatively consistent. Your capital assets, 23.9, almost $24 million, down from 27 million. And that decrease is just relative to the depreciation that was taken on the facility during the course of the year. And then the deferred outflows is really a product of your pension, your participation in Metro's pension plan. So there are some deferred outflows relating to that plan. And so your total assets as of year end, 49.5 million. That's up from 45.4 million. And that increase is primarily the cash that we saw, that increase in cash. Your liabilities, most of those remain relatively consistent with the exception of 2. You can see accounts payable did increase about $5 million from the level that it was at the same time last year. And again, that's partially due to the reasons I was saying. You did have reduced revenues during the last number of months during the year, and that COVID relief money that kind of made up for that, or was provided to at least partially reimburse you for those lost revenues. That came in, near year end, and so it was sitting in cash. So it is, subsequent to year end, that was utilized to pay down a lot of these accounts payable. Then the other item, larger item that we didn't have last year was the estimated third-party settlements and deferred revenue. And of this 7.6 million, about 5.7 million is deferred revenue relating to those relief funds. So in other words, you've got the cash up front, and then as you incur the expenses and incur the lost revenue, you will recognize those amounts. So as of 6/30 year end, you had recognized about 4.6 million of the amount in revenue, but you had yet to recognize 5.7 million. So that's included in that $7.6 million number. The other item, about a little less than 2 million, right at $2 million, are third-party settlements. You received about $2 million relating to some prior year settlements, but those settlements have not been yet closed. And so they are subject to more adjustment. So they've not been recognized as of year end, but as those amounts are closed, then they will be recognized, or whatever will not have to be returned will be recognized. So that's the reason for those 2 large increases in those liabilities. The rest of the liabilities remain relatively consistent. You can see some pension obligation down there related to, again, your participation in a Metro plan. So you ended the year with a net position, which is assets less liabilities, of 6.3 million. And that's a decrease from 11.9 million in the prior year. And then let's take a look at the next page, and we'll see how that decrease occurred. As this is your statement of revenues, expenses, and changes in net position. And so again, you have a column for 2020 and then a column for comparative purposes for 19. You can see the revenue items at the top. Net patient service revenue decreased from 41.7 million to 38.7 million. So about a decrease in 3 million for the year. And actually all of that, more than all of that, really occurred in the second half of the year. So COVID, took its toll, as it did with many organizations, both governments and commercial clients and nonprofits as well. So this is not an unusual thing, for a fiscal 2020 year end. Then you had state monies received, access and safety net revenue that you received from the state. That was also down about 1.2 million. And then you had other income. And the reason for that increase from 3 million to about 7 million or 6.8 million is the difference in that is the amount recognized for the CARES Act money that you did receive and had been reflected as earned as of year end. So it did not totally reimburse you for the lost revenue and the decrease in the safety net revenue from the state, but it did at least partially compensate for that. So total operating revenues down about $1 million from the prior year, 58.2 million. Then you can see the various expenses and the functional categories there. Your total expenses, 107 million. So that is up about 3.99 million. So that's about a 3.5% increase over the prior year. So you had an operating loss of 48.9 million. So the decrease in revenue, the increase in expenses increased that operating loss over the prior year of 44 million. Then you had revenue from the primary government. This is Metro, their amount that they contribute to the operation process of the hospital. That's about 43 million. So that also was down by about $1 million from the prior year, about 1.2 million. And actually, if you combine it with the capital contribution from Metro that's down below, overall it was down about 1.5 million from the prior year amounts you received from Metro. So decrease there as well. So all of these things end up resulting in a decrease in net position, of 5.6 million, almost 5.7 million for the year. So that's how the decrease in net position or your equity occurred for 2020. So that's the results of the operations of the hospital for that fiscal year. You have an additional statement of cash flows. I will not go over that, but that's just kind of a picture of where your cash was utilized, what it was generated from and what it was utilized for during the course of the year. But as we said earlier, you ended in a very strong cash position of 11.5 million, largely due to some of your CARES Act money that had not been utilized as of year end. The rest of the report are your notes to your financial statements. You've got the first 3 or 4 pages of that are your policy notes that describe how you account for various transactions. And then after that are specific notes that detail a lot of the account balances that you'll see up in the financial statement. So it just provides additional detail and some more information about those account balances, such as your receivables, your revenues. It breaks it down in a lot more detail, your capital assets, et cetera. So that just will provide you some additional information relating to those balances. And then in the back of the report is the Yellow Book report that we talked about, the report on internal control. And there is the actual finding, the significant deficiency that we noted, and management's response to that deficiency. So, but we've talked about that in depth. So that's kind of a 50,000 foot level view of your financials. But if anyone has any questions, I'll be happy to try to address those. Okay, well, that's our report, and we appreciate Bruce and Bruce's team in assisting us in conducting the audit and getting us the information that we need to do our work and our procedures. And they're always very forthcoming and and helpful in that regard. So we appreciate that.
Thank you for that, David and Julie. And hopefully this next year, we get to have a normal audit year.
Yeah, hopefully things will be back to a little bit back to more normal than they were this year for sure.
I do appreciate it. We missed y'all this year, frankly. It was hard to do the distance.
Definitely makes things a little more difficult for both, the auditors and the auditee, because you have to, scan information that we could normally just look at, hard copy, things like that. So definitely makes it a lot more work for you guys and a little bit more for us as well. So we appreciate the efforts.
Thank you.
Yeah. Yes. Thank you. It's, I could really tell that your team was really motivated to get us what we needed, and they stayed on it, and that was much appreciated because it's difficult in a remote situation. So yeah, we're hoping to get out there for the next one, which will be here before we know it.
Yeah.
Thank you. Thank you both. Tell Dell we missed
Thank
it.
you.
All right, we'll do it. We'll do it.
Okay, are there any other questions regarding the final audit? Okay, at this time, I would like to entertain a motion and a second to approve the final audit.
Joel, motion to approve.
Unmute your phones.
Bonnie, second.
Manson, I'll second.
Okay, so Bonnie second.
Oh, Bonnie, okay.
All right, any further discussions? Okay, if no discussion, all ayes.
Joel, I.
Manson, I.
Ranga, aye.
An aye.
Did Bonnie say aye?
Do I have to if I seconded?
Oh, I'm sorry. Okay, any nays or abstains? Hearing no nays or abstentions, the motion carries to approve the final audit. Okay, without further ado, if there's no further discussions, I'll entertain a motion for adjournment in a second.
I move to adjourn.
Who's that, Stevenson?
Yes.
Okay, can I get a second?
Second, Joel.
Okay, all ayes.
Aye, Ranga.
Aye, Bonnie.
I, Manson.
Aye, Stevenson.
Aye, Joel.
Aye, Alex. Okay. Any nays or abstains? Hearing none, we are adjourned. Thanks, everyone, and enjoy the rest of your evening.
Thank you.
Yeah, everybody.
Thank you. Thank you, Bruce, and the auditors. Appreciate your hard work. I know it's a tough deal.
Thank you, Joel. We appreciate it.
Thank you.